Hello traders, welcome to the TMT Daily Strategy video for Monday, July 23rd. I'm recording this on Sunday night so you guys can peruse at your leisure, get ready for the trading week. Quick admin note, if those of you who are still interested in test driving the algorithm that we do put on your computer, just send an email to support@tradingmarkettechnicals.com and give you a little reprieve of what it's about. Also, with the videos as well, the research videos, if you need further assistance or any type of information, you can also send an email to support@tradingmarkettechnicals.com. All right, so what do we have on Friday? We really had not much of movement, really. We were down ever so slightly, basically flat. We did have that little talk that Donald Trump was talking down the dollar, which gave a nice little bump up in the gold trade, and also, of course, in a lot of the other related commodities. So we want to keep an eye on that and on what the dollar is doing. It's very, very important, and we'll see if he can talk down the dollar and be successful, even in the short term. Gold spiked up pretty hard on that trade, and remember, gold is really, really oversold at one point. So we're going to get this corrective bounce. We just need to know from where, and could have started on Friday, actually Thursday, late Thursday afternoon, and the markets in gold started to rally. And we'll show you that with the commitment and trade reports, and we'll cover the dollar as well. But right in front of you is the McClellan oscillator, and it's showing us a neutral state in the markets. You can see here down, we've got 4.71, so really not much going on. We like to see when it gets a little oversold or overbought, and that's where we look for that either that snapback rally or, of course, the sell-off. We're in extreme levels. Right now, we're really showing you nothing. So it is the July chop, so just want you guys to be aware of that. Be very careful. Looking for positioning, and also, may I add, pay attention to the earnings calendar if you guys are holding stocks. VXX. Well, we had mentioned that the short sellers in the VIX-related products, volatility for that matter, they're shorting the VIX again, and the commitment and trade reports show that as well from way back here. And you can see very similar price action with the little tiny candles just kind of going down, down, down. And then look at what we have here. Same little candles, little candlesticks just kind of drifting lower and lower. Now, we can get a nice big pop up in the markets and we get a push lower, we could start that dollar cost average trade in a VXX. But these remain your main important levels for the trade, for today's trade, and also probably for the week for that matter. All right, here's the transports, the IYT, and you can see that here we are in an uptrend channel, right? We've made a series of higher highs and higher lows. We did fall below it. Now we're back above the 200, and we just got back to 21, and we're back. Well, I wouldn't say that we didn't close. We closed just right at the 50-day moving average. So now we need to see a little more movement taken away from that TMT proprietary price channel. That'll come in at the 194.44. That'll be your next area of resistance. But we can clear that hurdle, then I would suspect that we would try to challenge the highs. If not, try to get at that big resistance area, 204.29, which will help the bullish case in equities. You can see MACD and RSI here are on buy signals. Histogram actually went positive above the zero line, so that's also a good sign. Momentum is starting to move higher in the transports. It is our leader, so we need to see this really take a leadership role here. Next is going to be the NQ. Right, we do have our support area coming in at the 72.52. Your new support, I should say, your other support, your immediate support, would be at that 73.29.25, which was that double top resistance, now support. So that's going to, well, actually call it 73.34, 34.35. That's going to be your area here in the NQ for today's trade. You can see that now momentum is starting to crawl over here in the RSI, giving us a sell signal. MACD not as much, but you can see the histograms are lower low and lower high. So we want to pay attention to that too and make sure. I had mentioned before that I think Apple and the FANG stocks, they're going to be a really great short at one point. And remember, why do we have those gap areas? There's no more gaps to be filled in the NQ and in the QQQ, but there are in the S&P and the spiders, which will show you. So that tells me that we need one more nice little pop, and if that happens, money should flow into the Dow and, of course, S&P, and money should come out of this NASDAQ and go into some of these bank-related names that had a decent quarter. So we'll see, but it's starting to shape up that way. Still needs a little more time. Here's the ES. Here's your two fib extensions way up in here, but the two other gaps that still remain and still need to be filled are these two right here in the blue. we had that area here coming into 28.26 and a quarter, and then way up in here at 28.43 to 28.59. Okay, that's going to be another area of resistance that's going to need to play out here. Okay, next is going to be the YM, and here's that other big area, that gap that's going to need to get filled way up in here. We're way away right now, but we're just closed barely above the 25,000. New resistance will come in at the 25,345 and the 25,485. Okay, so that's going to be the MACD. Excuse me, that's going to be the YM, and then of course your support is that upper end of that TMT proprietary price channel, 24,842 in the YM. Okay, spiders. Same thing here, like the ES. You have that area here that needs to get up there on a closing basis, right? We tagged it intraday, but not on a closing basis, and sellers came back in again. So even if we were to come back down and get that small little gap that we have here on support, fill that, and then make its way back higher, challenge those highs, then I think we can get these gaps to get filled, like we've been talking about since February when we had all these gaps in here. That they all got filled now. So this is interesting. MACD starting to curl over. RSI gave us a sell signal back on I think Wednesday, Thursday. So this is something here that we want to pay attention to as well. It's perfectly normal for price to just kind of roll back down again with low volume and flag into support and then get another big attack to the upside. And remember, there's a lot of geopolitical risk out there. Donald Trump, Mnuchin, they're all talking via Twitter. So we have to be careful and be ready for anything that gets thrown into the markets here. Qs, okay, support will come in right at the 177. I'll call it 178. And you can see how it tagged this uptrend line right to the penny and roll back down again. So next big area of support, 175.57. That'll be the 21 EMA and the upper end of the TMT proprietary price channel, which coincides just nicely here. Okay, that's your second and bigger area of support. Right, MACD, RSI, same thing as the other indices, starting to roll over here. RSI on a sell signal, so that's something that we want to pay attention to. Next is going to be the Russell, and like I said, with these trade wars, a lot of people are getting into the Russell and putting their money, parking their money there. And also, what's not a good sign is going to be the staples, right? You have utilities, the staples, the real estate investment trusts, the REITs. They're all moving higher. That means that fear is approaching into the marketplace and money is being parked in there to hide until volatility starts to subside. Now, when you say, well, what do you mean volatility? We have no volatility, right? And that's true. But seasonality trends say that we start getting into a pickup in volatility from now up until October. So that could actually happen at any given moment. We can get a big pent-up volatility. So that's why we want to pay attention to that VIX, that VXX, which is one of my favorite products to trade if you wanted to get long volatility. Next is going to be the UUP. And you can see that Trump, that was on Thursday. Friday, the dollar rolled back down again into support. Your new support is 24.82. And if we can get some sort of movement, right? Like one day really doesn't make a trend, right, guys? We all know that. But if we can get some movement or sideways movement and then a down tick lower, we can get a nice big move in that gold trade, all right? And also as well as the crude oil. And speaking of crude oil, here's your commitment to trader reports in crude, and you can see here really no change, very little, but you can see that we've been hovering above 2.3 for 3 weeks, right around the unchanged area here. Still heavily shorted, right? They're still hedging, thinking that crude oil should go lower. So we want to pay attention to that, right? And a lot of these oil stocks are starting to set up again, so we want to watch that as well. Here's the crude oil. You can see we talked about when we were down here, we based. We should pop up. Now we have the gap area of support here that remains. 68.07 is the first area, and then we got the gap all the way down to that $67, okay? And then down here. So these are your levels here. So now, is this just creating a bear flag and we're going to go for lower prices? I like to see 72, 73 again, even take out the highs, the interim highs here, 74 and change, and then start to roll over again where we can start setting up a nice little short trade in crude oil. Okay, but these are your levels for today's trade. Next is going to be the commitment trade reports in gold, and this is a very refreshing little sign here. You can see the hedgers have reduced their hedge exposure again big time. Now this is a big sign. You can see the open interest contracts here are starting to rise to the positive side from being down here. So this is a very good sign, and we should get some sort of movement in gold to the upside at one point, especially now that you have the producers really They haven't been this long, or I should say less short, way back since 2017 here, September. So that's almost 2 years. All right, look at this. The trend continues to move higher. So they are reducing their short exposure. And you can look at, there's a lot of stocks to trade, but pick the ones that move, right? If you want the GLD, if that's a little too pricey, you can trade Nugget, which is the GDX. Nugget is the gold miners triple, all right? So not always follows gold all the time, but really do some homework if you want to look for an index to trade. UGLD is also a cheap one that mimics gold itself, but it's a cheap stock and doesn't trade as quickly as you'd like, so you need to get more share size out of this. So here's the GDX, and you can see that we're just underneath the underbelly here. 2168 remains support. We've got to get back in here and get back above the 21 to 50-day moving average, and of course the 200 way up in here. So we'll see what happens if we want to watch this the GDX, because we'll see if there's any signs that we are starting to move higher. Because once the miners start to go to the upside, then gold will eventually start to follow as well and really gain momentum. Speaking of the gold trade, you can see here this is Thursday's reference. 1210 is our new reference point. So if you are long and you feel like you want to put a stop in, so just below 1205, even if 1200 is a round lot number, but you just follow your trading plan. But this is our new reference point, so maybe we can get back up to the 1259, 1260 area, right, and start to rally up from there. I think, though, I will tell you that if you are in a profit and you're starting to move higher here, there's nothing wrong with taking half off, a third off, whatever, but because I do think that we'll go down one more time. And maybe not. I mean, that's the whole thing. That's why you always want to keep a little bit, But watch the gold trade. Looks like it's starting to set up again. So I'm really liking this gold trade.